Joining us right now on all of this is Brian Deese. He is the director of the National Economic Council. And Brian, it's always good to see you. I think we're trying to figure out what to make of the economy and the overall health of things right now. On the one hand, if you look at the jobs picture, it's a good one. Unemployment is low. Americans' household balance sheets are looking pretty good. But on the other side of the ledger, you have serious concerns about a looming recession. You've got inflation running hot, GDP running a little weak, and you've got real wages that have gone down along with the stock market. How would you kind of sum things up, putting all that together?
Well, I think what we see in the economy right now is a striking degree of resilience. As you mentioned, certainly that's true in the labor market, but also in terms of household balance sheets as well. And we are seeing some important signs of cooling as we go through this transition. Job openings down, almost 1 million job openings now back to where they were last summer, the summer of 2021, and other areas like on the supply chain. The New York Fed's index of supply chain is down back to where it was in pre-pandemic levels, as you see companies like GM just mentioned expressing some significant progress in getting supply chains to move, and obviously that brings prices down throughout the supply chain. But we haven't made enough progress on bringing prices down, and that's why the president, our administration, our focus at this point is on what we can do to help encourage that process of bringing prices down in a way that doesn't give up all of the important and historic economic gains that we've made. So focus on energy prices, for example. And there, I would note that in addition to oil prices, which are down 30%, we've seen natural gas prices in the United States come down almost 45% from their summer highs. That positions us better, certainly better than we were just a couple of months ago in the industrial sector and going into the winter. But of course, on the oil side, gas prices again coming down. They've fallen now. They're falling for the third week in a row. And we know that gas prices, in addition to being incredibly important for American families, are connected to confidence and sentiment about the economy. So look, we're focused on a resilient economy based on a historic recovery. We need to make more progress on bringing prices down.
Hey, Brian, the Biden administration didn't create all of these problems, but there's a pretty serious argument that can be made that it hasn't helped alleviate it. And in some cases, the policies have actually exacerbated things. I mean, when you look at real wages, they've come down significantly, have not kept pace with inflation, and that pinches workers who are struggling to get by. If you look at what the Biden administration has done in some of these instances, it has not necessarily helped. I think the real concern with inflation is, does it get into wages and stay there in a real way and then continue to spiral out of control? There's people who could say focusing on labor unions, focusing on trying to push some gains through in other areas isn't helpful. Not that you don't want to help American families and make sure that they are making enough to keep up. But once inflation really gets in wages, it does become problematic. How do you shut that off?
Well, I would say two things. The first is let's look at the global economy. These issues of inflation are global, absolutely global in nature. EU inflation is running at 10%. The United States is uniquely well positioned in a challenging global environment to address lower prices from a position of relative economic strength. That's not an accident. That's the result of policies that have driven a strong and equitable recovery, helped principally workers in the bottom half of the income distribution in a way that prior recoveries haven't. And so that positions us well. But the second, let's look at what this president has prioritized. Over the last year, the combination of the infrastructure bill, the semiconductors chips bill, and the Inflation Reduction Act are taking on long-standing problems in our economy that are actually going to increase productivity in our economy, reduce price pressures, better infrastructure, a more resilient industrial base that is primed for a complicated global economy. We see what's happening in China over the course of the weekend. And efforts, for example, to bring down prescription drug costs, bring down energy costs at the family and household level. All of these are steps that take on long-standing problems that the president worked with Democrats and Republicans to get done and are going to pay economic dividends in the years ahead.